Good morning, y'all. We got plenty of stock market news to go over this morning. Let's get to it. So Wall Street picked itself up off the floor Monday following a 3-day slump, but the rebound looks to be very short-lived as investors brace for the week's main event, the Federal Open Market Committee, or FOMC. That meeting, we're going to be watching it, no doubt. Futures based on the S&P 500 index were down about 0.4% shortly before the close of overnight trading, and futures based on the Nasdaq 100 dropped about 0.6%, both tracking for the fourth down day in the past 5. Futures based on the Dow Jones Industrial Average eased about 0.2%. Technology leading the way up Monday and is leading the way down today. Shares of semiconductor leader Nvidia fell over 1% in pre-market trading, giving up gains late Monday after CEO Jensen Huang, speaking at his company's GTC conference in San Jose, California, announced a new generation of artificial intelligence chips. And yes, been watching his interview with Jim Cramer. Obviously, we're all keeping an eye on that. I don't go too much into those stocks, but I know a lot of y'all do, so I'm keeping y'all updated on that information. So other than that, markets focus likely will be on the other side of the country in D.C., where the FOMC begins a 2-day meeting that's widely expected to conclude with no change in the federal benchmark funds rate. There's still potential for a surprise, as we've seen before, but Chairman Powell post FOMC press conference Wednesday afternoon will be closely studied, and the FOMC will also update its economic forecast, including its so-called dot plot of members' rate expectations for the next few years. In the wake of higher than expected inflation reading the first 2 months of 2024, Powell may be inclined to emphasize the message that the central bank will take a cautious approach to the prospect of any interest rate cuts. So we'll just see what he's going to do. It's going to be 2 p.m. Eastern Standard Time Wednesday, following his press conference, that the rate decision is going to come out. They keep changing it back and forth, and it's given the market a lot of volatility. I know we're all tired of it. Yes, the volatility does give us profits, but we're tired of trying to figure out what the long-term plan is when they say, yes, we'll do it soon. No, we won't. Yes, we will. No, we won't. And it just goes back and forth, and it could still keep going like that. They're not making any promises. But the Fed isn't the only central bank making headlines this week. Earlier today, the Bank of Japan raised its rates for the first time since 2007, ending its negative rates policy aimed at fighting inflation. So I don't know if we're going to start doing that. We'll see what they decide. Again, be prepared for the old switcheroo routine. We've been getting that a lot lately when they do their meetings and press conferences. They say one thing and then they end up doing another, so just be careful about that. The 10-year U.S. Treasury yield was down over 3 basis points at 4.304%. So, nothing wrong with that. We're going to see how that leads up. The U.S. dollar index was up 0.3% at 103.896. The CBOE volatility index was up 0.2 at 14.53. Crude oil down about 14 cents, so it's now at $82.02 a barrel. Bitcoin was down over 7% at 63,549. That's been very interesting. Another reason I don't get into cryptocurrency. It can go up just fine, but it can also plummet even faster. So what we're going to be watching in economic news, the Census Bureau reported housing starts rose at an annual rate of 1.521 million in February, up from 1.374 million in January, and higher than analysts estimated. So starts were expected to come in closer to 1.435 million, according to a census figure, but obviously it was above that. The Bureau also reported building permits, a measure of future activity, at an annual rate of 1.518 million last month, up from 1.489 million in January, also above forecasts. Analysts expect permits around 1.485 million. Now, we are getting into warmer months all across the country, so it does make sense why they'd be getting higher. Yes, they did get higher than what they're expecting, but still, it's going to get warmer. People are going to be more inclined to be working on their house. It's not going to be snow as much, not going to be rainy as much. And it just gives them more time to work on things. So it does kind of make sense why it would be higher than they expected. The expectations look a little bit low in my opinion, but that's just my opinion. The FOMC is expected to issue fresh economic and rate projections for the first time since December. So obviously we're going to keep a really close eye on that. The dot plot released in December suggested policymakers expected 3/4 point cuts in 2024. However, inflation perked up in early 2024, which could mean the next set of dots may not be aligned for as many cuts as investors hoped. So we're just going to keep an eye on that. What we're going to be looking at, a lot of the technology stocks have been in the spotlight. And so we have Micron Technology. We're going to be watching Philadelphia Semiconductor Index. I don't go into this stuff as much, but I see where it affects other industries, and I focus more on those because everyone's been throwing around AI so much. Like if you look at Microsoft's statements, they're throwing around AI like it's the word of the year. And a lot of companies do it. The more they mention AI, the happier the investors are, even if they had a poor report. So I'm not too much into that. I see where the chips go to, and I go towards that. Also, food processor General Mills. If it drops, I'm grabbing it. So we're going to see where its reports are going to be coming in. KB Homes, we're going to be seeing what they're going to be doing. But if you notice, if you have all these permits for homes to be built or to be worked on, KB Home would be possibly a good one to get into. I most likely will not, but we're going to see. If it drops a whole bunch and then the reports of all those additional permits, it might be a good idea for myself to get in there. I'm still debating. I'm still most likely not going to. FedEx, it delivers all around the country. I mean, why not? We're going to be looking at that, see what it's going to be doing. And if it drops a lot, we'll see. Again, most likely not. Nike, Lulu, those two, I'm not interested in at all. I know a lot of y'all are, so they're going to be coming out Thursday. So, healthy shipping numbers usually reflect a strong economy. So, FedEx. Reports are typically watched as a global barometer of business growth. FedEx shares are about flat compared to the end of 2023, which puts the stock performance around the middle of companies in Dow Jones Industrial Average. The transportation average is down 3.2% year to date, but also people go back and forth between FedEx, UPS. Now you got Amazon doing all this delivering, and DHL comes and goes for us, even though it's more of a world leader there. So it just because one doesn't do well doesn't mean that everything's doing poorly. They could just be switching back. Who has the better rates? Who's going to be in what area more? That is something to keep in mind. So yesterday in review, stocks rose in early trading, mostly held gains into the closing bell. After roller coaster action the week before, the SP 500 Index and NASDAQ Composite both snapped 3-day losing skids to finish sharply higher. Large caps were in favor, while the small cap Russell 2000 Index ended modestly lower on the day. And we're going to be keeping an eye on the Fed. I'm not going to go all into this report. It's basically the same as what I've said several times the past couple weeks. 99% chance they're leaving rates unchanged. 93% chance the funds rate will remain unchanged after the Fed's May meeting. It's the exact same odds. I'm not going to dive into that report. I'm just going to mostly skip that. It's the exact same odds. Nothing's really changed. So, again, we're going to be watching the Fed. What are they going to do? They're going to have their meeting. They're going to say this. They're going to say that. They're going to try and make it sound as pleasant as possible, whatever direction they're going to go. And we're going to have to deal with the aftermath. So it could be volatile. It could be good. We'll see what happens. And again, the big companies, they're dialing up the AI talk. It gets old because they're just trying to put the word AI in as many reports as possible because it makes it sound like they're breaking through barriers even if they're not doing anything. And to me, that's wrong, but that's just something that I watch for in the reports, to where they could be saying AI more and more. And if you notice on some of them, say such as Microsoft, the more they mention AI, even if their earnings aren't too good, the stock will go up because it sounds like they're really making breakthroughs. It's just they said the word more in there, and there's been some studies on that, and it's very interesting to look over the studies. I would encourage all of you to look into that as well, so it's not just taking my word for it. It's the more someone says AI for their company, obviously the bigger companies I'm talking about, everyone's thinking that they're going to be revolutionary, even though it's everyone doing the exact same thing. So all kinds of things, Netflix, Amazon, Apple, Disney, they've been doing their streaming offerings, and it goes up and down. When inflation's up and people need to pay for either their streaming service or their food, most people will pay for food. Not everyone, most people. So just we're watching with inflation, how costs are to how people are going to do with their streaming services, and we'll see how that goes. So on the calendar, March 19th, February housing starts and building permits. So that will be today. March 20th, FOMC rate decision projections and expected earnings from General Mills. There's others coming out, but I'm focused on General Mills, see what it's going to do. The 21st, FedEx. We're going to see its earnings, see what it's going to do. I don't really care about Nike, Lululemon. I know a lot of y'all do, so I'm throwing it out there just so that it's presented that the 21st is the day to watch that. 22nd, nothing big's going to be happening. 25th, February new home sales. Be watching that. And 26th, durable goods orders. We're going to be seeing how that's going to affect the market. So that's been pretty much it so far today. There will be more news later. We'll see if there's anything worthwhile making a video about. But just keep up to date on news. That's very important in this line of work, in investing, in day trading, swing trading. It's very important. Now, obviously, if you're doing more long-term, this short-term news isn't very important. I don't quite agree with Warren Buffett's statement that you can just buy anywhere in the market and that it will be fine. Yes, if you look at it historically, if you buy just anywhere within a general year or two and you look 30 years later, you'll most likely be up, yes. But why not make a little bit more money? Why not watch the news just a little bit on the stock market and maybe make a little bit more of a profit, make better dividends? You can make more dividends if you don't have to buy as many shares to get the same amount as if you would if it were higher. So just keep an eye on the news. We'll have more videos just like this coming out. Let me know what y'all think. What are y'all looking forward to? What earnings? What reports? What government data? I'm very curious to hear it. Put it down in the description, and I'm looking forward to reading it. Have fun in the markets. Going to be volatile. And I'll see y'all in the next video.